Let's talk about HELOCs. I'm Antoine Anderson with Black Investments Matter. Let's go over some terms that you should be familiar with before you make the decision of getting one. First of all, let's define HELOC. It's a home equity line of credit, and it's just as it is pronounced to be. You have like your credit cards, for example, where you have a very high interest rate. Currently, the average interest rate for anyone with holding a credit card balance is around 20%. It is extremely high right now. The cost of money itself is extremely high. Now, compare that to a HELOC loan, which is a home equity line of credit based on the amount of value in your equity of your home. So instead of using a credit card at 20%, you can open up a line of credit based on your house, reoccurring, drawing in, drawing out of it at a much lower rate, even at these high interest rates at 8%. Still beats the line of credit that you would use with a major MasterCard or Visa right now. Something you might want to look into if you find yourself in a need to be able to access funds quickly without having a whole lot of hassle that you would get with a traditional loan. What are some of the pros and cons of a HELOC though? So first off, you've got as a pro, it's a much lower APR than traditional credit cards. As I said, it's based on the prime rate. So right now the prime rate is around 8%, which is still very high, but just not anywhere close to the 20% you would be paying for a line of credit through a major credit card. You also can deduct some of the interest that you are going to be paying back on your loan on your taxes. So that deduction is based on the type of purchases that you use. There'll be different schedules that you can use on your taxes to accommodate what you're actually spending the money for. Also, there's this notion of flexible repayment plans. Now, the repayment plans on a HELOC sit around this notion of a draw period versus a full repayment period. The draw period is typically reserved for something of a 10 to 20 year HELOC loan, where the first 5 or 10 years you can set up to be interest only. This is a draw period where you're only required to pay the interest on the loan of the amount that you actually took out. After that period is over, however, you're going to be responsible for both interest and principal. Now, you can pay some of the principal as you're going through this line of credit as a revolving line of credit with your own equity. But what you want to keep in mind that there are prepayment penalties if you want to pay this thing off early, and those penalties can usually be in the hundreds of dollars, but definitely check the terms of what you are actually signing up for before you get into this loan. You also want to take a look at some of these cons that can be very detrimental to whether or not you make a decision to do a HELOC loan line of credit, a home equity line of credit versus a traditional credit card. The biggest thing is that these are all variable rate interest. You could be paying much higher interest rate depending on how our economy goes. You could be paying a much lower. Your home also becomes collateral for that loan. So you're giving up ownership of your home. Again, you already have your mortgage if you still owe on your home, and you're going to have this added burden. This is typically what happens with second mortgages. Okay, and your monthly interest rates and your payments could just skyrocket. That would just probably defeat the purpose of it getting the loan in the first place. Again, it depends on your particular situation. Not something that you want to take lightly. But as far as building your wealth, and if your goal is to own your home, you may want to look at it. But I would also look at different things. Like in my situation, if my interest rate on my home mortgage is way lower than that 8%, there's a significant reason why you would not even touch a HELOC or any other loan, not as it relates to your home, unless you are getting a equal or not that much higher loan, or if there's an emergency. This usually be the only reasons why you would even think of such a thing. Quick access to cash is powerful, but the cost of that money is something that might make you think twice before getting it. Always consult a financial advisor before you get into these kind of decisions.